Who wants a second job at the same time? So we can find a very good time-efficient way of doing that. That's what we're going to do. We're also going to help you teach how and when to trade. Mentoring and trading advice, very, very important, because it's not just a one-off learning, it's an ongoing coaching program. Building a trading plan, and then finally, full-service broking at a discounted rate. That's effectively what we're going to do with you today. Now, with that in mind, you're going to think, well, is this guy worth listening to? So let's have a look at some results, because most people will be thinking, who's seen Jerry Maguire, by the way? Okay, what's the catch call? Let's get down to it. Now, I'm in a very fortunate position because when we talk about results, because I also own the broking business, we can actually show you the results that clients have achieved, and not just one or two clients, but hundreds and hundreds of clients in one go, as opposed to recommendations that people make that some may have taken and others wouldn't. So can you understand the difference between what people have actually done versus what they could have done? Big difference. So let's start off with a $10,000 account at the start of the year. Now, the reason why I picked the start of the year, and this is important, from January to March, how was the stock market in Australia going? Okay, and then from March till September, how is it going? And then from September to now, how's it been? Sort of hasn't decided what it wants to do yet. So what we've actually got are three distinctive different patterns within the market. It'd be really easy talking about a market that's just done that because anybody can make money in that situation. Okay? Or if it's just gone that way because it's got a trend. So we've picked a time frame that's up and down. So these are real returns, they're net. And this is based on someone starting out the year with $10,000 and taking all the trades that we've put out via SMS. And I'll talk about their SMS service in a few moments. So this is every trade, not the good ones, all trades. So we've closed out 36 trades with an overall net profit, that's after all brokerage, after all fees, of $12,786. So your 10 grand account is now worth $22,786. Is that a reasonable return on money? Okay. And that's what people have done. Not what they could have done, not someone hiding under here thought about it, but actually people have done. Now, of course, there's two things I need to point out on this. Firstly, trading does involve risk, and I've talked about that before. Secondly, past performance is no guarantee of future performance. It's very important that I tell you that. And if you're married, you know exactly what I mean by that statement. Okay? Think about it. When was the last time you got flowers? Don't be elbowing Henry, by the way. You leave that to me. Okay? So that's what we've done. Now, I'd say that's a reasonable, real return to be talking about. Who's happy with that sort of stuff? So based on that, let's show you how we do it. So trading and investing is about three different things. Most of the time when I talk to someone, if they're fairly new to the market, the first question they're going to ask is, how much money can I make? Fair question to ask, right? I always prefer to say, well, what's the risk, and then what money can I make? So let me just illustrate that point in a little bit of detail. Could I get a volunteer? You can stay in your seat, don't really need you to do anything, just a volunteer. Thank you very much, ma'am. What's your name? Anna, thank you very much for volunteering. Anna, now I'd like to give you some money. We're going okay so far? Terrific. Now, Anna, I need a favor. Could you please take a boogie board bag to Bali for me? Okay? So the money side of it, you get where we're going with this. The money side of it is very appealing, but the risk aspect to that particular thing, and it's a silly example, and thank you very much for volunteering, Anna. The actual risk side of it was ridiculous, wasn't it? And so can you understand, whenever we're talking about any kind of investment, we always talk about, firstly, what's the risk, and then secondly, how much money can I make? So everything we're going to look at today will be structured in exactly that format because it's most important to manage risk first. Now, the third thing we want to do is not too much work, because I appreciate that paints a fairly bad picture of the average trader investor. Look, you want to make money, you don't want to take risk, and you don't want to do much work. Geez, what a nasty person you must be. But that's the model we work to, because life isn't about working hard, because we've only got 24 hours in the day. There's only so much hard work we can do. It's about working smarter. And if we're going to find a way to work smarter that enables us to develop extra income and manage risk at the same time, then we're putting ourselves in a model that works. And I guess because of the way that we deliver this, that's part of the reason why people like Tony and Robert and Jamie and people like the ASX use us to provide their education. So I'm going to just go through a few things. Now, we did this on Saturday in some detail, and I appreciate you've probably seen a little bit on options over the weekend. But I just want to recap on a couple of things. Remember, we just talked in loose terms on Saturday about what an option was. And if you remember, it was something that we could buy for a relatively small amount of money, say 10 cents. Who was here on Saturday night, by the way? Pretty much everybody? Or who wasn't here on Saturday night? Okay, so one or two. Okay. What we can do by buying an option for a relatively small amount of money, I don't know if we can flick over to here. Or do you want to go to the other whiteboard, Rob? We can do that. It'll be easier for you, mate. By the way, Rob, thank you so much for your help this year, mate. Rob's been on the road with us all year. These guys never get a round of applause or a thanks, so give the guys at the back a big round of applause. Thanks, mate. We get to do the easy stuff. We just stand up here and make noise for 80, 90 minutes. These guys are in early. They make sure everything runs smoothly, so it's really appreciated, buddy. So for 10 cents, we get the right to buy a piece of paper, and it gives us the right, not the obligation, if you remember from Saturday, to buy, say, shares in a company for a price that we agree now. So 10 cents gives us the right to pay $1. If that share price went up to $1.20, then the value of this piece of paper would go up to at least 20 cents, giving us leverage and a good return on our money. And you probably recall we talked about that. If it went the other way and the share price fell to 60 cents, then we'd lose our 10, but better to lose 10 than 40. So options give us leverage and we risk less money. The other thing, as I said, was that we get time to decide. And this is the reason why I really like to use them. Now, if we went next door to the casino here, wonderful establishment, and we're at the roulette table and they're spinning the wheel around, and you came in and said, look, I want a 10-cent option on red, and if it comes in, I'd like to put $1 on it. Now, we know what their reaction would be. Would that be, sure, no problem? Or security table 3? Okay. And they wouldn't let you do that because you'd be moving your odds of success in your favor, and obviously casinos don't like that. So if we can do that in the market through trading smart, then that's obviously one of the reasons we like to use options. So there's some of the reasons we like to use them. Bit of a recap from what we talked about on Saturday. So with that in mind, some of the key advantages to options. Well, they give us great leverage, but here's the reason why I like to trade with them more than any other reason. They give us the ability to make money in a rising market. Who likes the idea of that? But then shares do that, so do CFDs and so do futures, right? What about foreign exchange? What about in a falling market? Well, you can do most of those things with CFDs or futures or FX. What about in a sideways market? Now, options can let you make money in a sideways market. No other investment instrument can. Do you think that's an advantage? So if the stock price does nothing, you can still get paid. That's my while I'm asleep strategy, which is what we call covered calls. Also, if the market's really volatile and we don't even know which direction it's going to go in, up or down, we can still make money by using a strategy called the straddle. It's one of the 11 that we teach. So we've got the ability to be able to potentially profit from any circumstance that the market represents. Now, do you think that would be an advantage or a disadvantage to trading this kind of instrument? Are we united on that, or we're still thinking about it? You're going, something to think about maybe? Okay. So up, down, sideways, or volatile, we can make money with options. We use less capital, we risk less, we get time to decide, don't even need to own the shares. And again, we're looking to trade smart, not often. 36 closed-out trades with our SMS service over the last year. Now, that's not busy, but it was a good return on the time input that you had to put in because it's not hugely time-consuming. Now, we talked about share renting on Saturday at some length, and I'm not going to go into any detail on that now because I believe you guys, after the time that both Jamie and I put in, should probably have a pretty good grasp on it. But our point was that it's a great kick-along strategy that has the ability to help you generate cash flow with minimal time input. Now, just out of interest, how much time did it take us to place a trade on Saturday for our first time? Does anyone remember? 52 seconds, wasn't it? 52 seconds. So was that a massive time input on your part or not? Very, very low time input. No downloading data, no having to watch, just basically responding to information that's sent to you. Again, one of the reasons why we like it. And it's a cornerstone strategy in what we do. But what I wanted to do this morning, I wanted to show you how we get the supercharged stuff going on, because that's all nice and it ticks over. But I want to introduce you to some other strategies today. I'm not going to overload you with content because today we're going to focus on the outcome, not the process. But one of those strategies we use are credit spreads. And we've really mastered trading these to the absolute pinnacle for our clients this year. We're actually the largest retail options broker in Australia for trading these strategies. And that's quite something because it gives us a massive competitive advantage in the marketplace. It means we've got good relationships with the market makers. It means we're able to get better prices than you can get trading online. And it means that when we put a trade through our blocking system, which I'm going to talk about in a few moments, you're definitely going to be at a big advantage. So how do we do that? Well, let's start off looking at this chart here. And this is a chart on a company called Newcrest. Who's heard of Newcrest, by the way? And Newcrest is a gold company. Now, a lot of you looking at that chart right now are going to see squiggly lines. Can anyone say, yeah, I see squiggly lines there right now? Yeah. Especially after 4 days in here. I mean, geez, you've been deprived of sunlight and a whole manner of things. Now, it's really interesting because trading and markets are very similar to a lot of different things in life. In life, we all see things, but a lot of people look and don't see. I'll give you one simple example of that. One of my big passions is photography. And I'm going to share with you 2 photographs that you will all be familiar with. Now, everyone goes through life snapping. That's what Facebook is for. But everyone takes snaps, but every now and then someone just captures a moment and time and it's iconic. Does anyone know what I'm talking about here? And the 2 photos I'm going to share with you, there's an Afghanistani girl with a burqa on with blue eyes and really olive skin that was in National Geographic a few years ago. Who's seen that photograph? Knows what I'm talking about? nearly everybody in the room. Now, lots of people take photos, but that photographer captured a moment. It's a very powerful photograph because he wasn't looking, he could see. Give you another example of that. Was a wonderful lady I had the pleasure of meeting a little bit earlier in the year, a lady called Kim Phuc, who was the Vietnamese girl that got burned during the Vietnam War with the napalm. Who's seen that photo? That's an iconic photograph once again, and someone captured that moment in history. And that photograph is probably one of the most displayed photos about the Vietnam War, in fact, about humanity. She's actually an ambassador now for photojournalism over at Griffith University. Very, very amazing lady. Now, those photographers weren't looking, they saw. So when it comes to looking at the market, most people just look and they go, oh, look, Newcrest, it's got up to that share price a few times. It's probably going to fall down from there. I'm glad I don't own that in case it falls in value. That's someone that's looking. I look at that and I see money. Would you like to see money when you see that sort of stuff? It's just a bit of training to help you do that. It's just being able to follow that recipe book. So what I'm specifically looking to do in this particular trade is make money from Newcrest mining falling in value because we like to profit. Now, we don't like to talk about it, we like to do. And one of the things that you're going to discover as we go through our process is that we don't do paper trading, for example. I've never believed in paper trading, and I say that for a number of reasons. I've never ever seen anybody drive a paper trading Mercedes to the paper trading airport to go on a paper trading skiing holiday with their paper trading friends. It's make-believe. It's fake. You may as well play with Monopoly money in life and go, I'm a millionaire, I've got $1 million of Monopoly money here. You have to get your feet wet to learn. And you have to take action steps to do that. Now, the only way you're going to be confident to do that is to have a process, and we'll talk about that process in a moment. But what we're looking to do here, in this particular case, don't get caught on this process. We're going to sell an expensive option, a $31.50 option for 75 cents. We're going to buy a cheaper option, a $32 call for 57 cents. Now, don't get caught on what's going on there because we're going to teach you that over a period of time. That's going to give me an income, which will go into the account tomorrow morning, of $1,800. That's what I want you to be thinking about because that's the outcome we're talking about here. Now, how much risk on this trade? About $3,200, so you'd require about $3,500 of your own money to take this particular trade on. Now, that's something that's probably within most people's grasp. If it's not, we do take body parts or jewelry, so just bear that in mind, okay? That's a settlement process. The key thing here is that because we sold something for 75, bought something for 57, the difference is 18. Now, on this kind of trade, we do that on 10 contracts. So you need about $3,500 of your money. You get $1,800 income on this particular trade, and that's what this trade's all about. Now, a couple of days later, in fact, 7 days later, and this is real trades done by hundreds and hundreds of people in the marketplace. So my question would be, why not you? Who'd like to be doing that trade right now? Okay, because the market's open right now. So the net profit, because we elected to close out early, and we've done that, in fact, most of our trades this year, we've closed out early because we like to manage risk for our clients. And what we did, we closed this one out early for a net profit of $570. That's after you've paid all your fees. That was after 7 days in the marketplace. And the work input from you as a client would be about 2 lots of 30 seconds on the telephone. Now, $570 for a minute's work, what's that as an hourly rate? Has anyone got a calculator? They can crank that one up? That's a pretty effective use of your time. Would you agree with that, guys? Yes or no? Yep. Okay. And that's really what our business is all about. Who's interested in that? Okay, that's good. Now, as I say, please don't get caught up on the process today because we will spend plenty of time with you on that. I just need you to focus on this outcome. So how do we communicate? Well, we use this amazing piece of technology, and I don't know, has anyone in the room, I mean, this is hypothetical because I know you probably don't, but has anyone in the room got a mobile phone? Who owns a mobile phone? Just put your hand up if you own a mobile phone. Okay, good. Now, we've tried communicating with people in a whole manner of ways over the years. You can send emails, you can get on the landline, you can send smoke signals, a couple of Campbell's cans with some string. There's a whole manner of ways that you can do this. But a mobile phone is amazing because you guys have all got a mobile phone. How many people have their phone with them right now? Okay. And how many people have got it switched on silent or vibrate or something similar? Wow. So you're still contactable. And that's why we use mobile phone. In fact, we use SMS. And to help you, and one of the things I'd suggest you do, I have and some of you have heard this before, but I have a dedicated ringtone on my phone because you can have different ringtones for different people. So when I get a ringtone or a call from, you see it says Halifax, Queensland up here, which is where my education business is based. Whenever I get a message from there, it goes, ching ching. Okay. Now, I'd just like you to try that for a moment because it makes me smile every time I hear it. So imagine your phone's rung and it's gone, ching ching. See, you're all smiling too. You haven't even got the ringtone yet. I mean, it's pretty good. Because I know that's a very, very important call for me to take because it's a money call. Okay? So I could be doing something through the day, and I want you to picture this. You could be at work, excuse my filthy mouth, and talking with your boss. Sorry for doubling up in the same sentence. And unless you're married, of course. And you can say, look, ching ching, yeah, look, yeah, I'll be back. I've just got to make this call over here. And he said, this is important. So is this. We're making money. You just pipe down. Yep, 30 seconds, and I'll be back in. And after a period of time, he's going to get a bit jaded with that. So you can do the unemployment problem in Australia a favour and give your job to someone that needs it. Now that's very, very powerful, because SMS means that you've already got your phone in your hand. This is why we do this. Imagine when I'm skiing, ching ching. It's like, oh, come to daddy. What do we got here? It's great. So what sort of stuff do we send out? And I wouldn't expect you to understand this just yet, but basically if you can read that, and I'll just read it to you. It says, Halifax general advice only. We're entering into a bear call spread for BHP, so we're expecting BHP's share price to fall. Now what we're going to look to do is sell the $36.50 calls and buy the $37 calls for an overall credit of around 13 cents. Now what does that mean in plain English? It means $1,300 is going in your account. Like the idea of that? How much money do you need to do this trade? About $4,000. Okay? Now, to make it really easy, you notice at the bottom of the SMS there's a phone number that's underlined. Now, when you get a phone number in a text message that's underlined, what does that mean? So if you click on it, it goes through. And we build a business like this. It should be almost called like lazy sod trading strategy, because it simply cannot get any easier than you get a message and go, yeah, that strategy makes sense because I understand that strategy because I've been taught it. And I'd like to speak to a dealer. Click on that underlined number, and you're going to be speaking with a dealer straight away. Now, can anybody see themselves doing that, just out of interest, finding that 30 seconds that you need through the day? That's interesting, isn't it? It's not a hard process. And when you build a business, you have to find something that's easy for people to do, because if it's easy, people will do it. If you make it hard, guess what? People will not do it. And the stakes are too high here for people not to do this. So once that's happened and you've received the SMS, let me just give you an idea of what happens next. Well, you call the number, and within a couple of rings, you're going to be talking to one of the dealers.
Unbelievably well, my friend. And yourself?
Yeah, not too bad, mate. I just got your SMS now with a bear cost bed for BHP.
Yep.
I was just wondering if it's still, I don't know what time it came through, actually. My phone's playing.
We literally sent it out about 3 minutes ago, so you're well and truly okay there, Michael.
No worries.
What we're looking at doing, we're selling the 3650s, buying the 37s, call options on BHP for June for a credit of 13 cents.
Sure.
How many times do you want to do that?
10 would be good, doesn't it?
10.
How easy is that? It's not code once you understand the recipe book, right? It's like saying, oh, you got some sugar and a bit of flour and an egg. That's what we're doing. Quick call, job done, back to whatever it was you're doing through the day. And this is part of the reason why our business has grown, because we've made it very, very easy for people to do that. Now, when people come on board within our business as a member, as a client, we start everybody off in what we call plain vanilla trading. So that's literally the stuff that we do with the SMSs. And in fact, the results that I shared with you right at the very start are just for our SMS trades, the plain vanilla stuff. And that's an important time frame, because what it's going to do, it's going to give you the opportunity to feel more comfortable with the process. It'll give you the opportunity to get to know us a little bit more, and it also gives us the opportunity to get to know you a little bit more too. So a lot of people starting out might go, well, okay, we're going to put 10,000 in a trading account. And I don't say 10,000 lightly, because I appreciate that's a lot of money for a lot of people. But as a trading amount, realistically, that's what we're probably going to need to get started. I could say you get started with 5. I wouldn't be doing you any favors by saying that, because you don't have the tolerance in the marketplace to take a bit of bark off. Now, over a period of time, having started with 10, you might say, well, look, I've learned this process reasonably well. I've got another few $100,000 over here in my superannuation fund, which I'd also like to manage. And I could understand why you'd like to manage your superannuation fund, because how many people have lost money either through a managed fund or a self-managed super the last 5 years? Put your hand up. Wow. Wow. So taking control of it yourself, and all of the stuff that we teach and all the support that we provide fits hand in glove with managing your own super. Over a period of time, you're going to start entering into other strategies as well. So you might be doing things like covered calls, or you might be doing collars, or you might be doing synthetics and a variety of other things, because we teach a lot of different strategies. Now at this juncture, you might think, well, that's all well and good, but what about the whole buy shares and hold on to them? And it's probably worth just acknowledging that just for a few moments, because the market landscape has changed massively. Not too long ago, I was in the States and I was reading a great article, and unfortunately I've left it in the back of the seat on the plane. And it talked about the average duration that people own shares for. Now, 30 years ago, the average duration that people own shares for was about 3 years. These days, it's about 3 months. That's a massive shift. Now, I want you to think about this in logical and common sense terms for a moment, because that's all this business is all about. Does anyone here have a footy team they follow? Who's a footy fan? Great stuff. What's your name, sir? Simon, who's your team?
I follow the Broncos.
Okay, good stuff. Another good year-ish. And so if we took the Broncos of today, now obviously the Broncos weren't around 30 years ago, but if we took the Broncos of today and we played them against the foundation team of what, they've been around now for about 12 years?
1987.
87, there we go, so we're longer than that. Yeah, so it's been a few years, right? Now, if the team from back then was playing the team of today but with today's rules, so limited interchange, you can't come on the field and give someone a broken jaw and say, hey, I'm marking you, just watch out, buddy. And the speed of the game is significantly faster, the ball's in play longer, the players are fitter and stronger and faster, and so on and so forth. What do you think the scoreline would likely be, current team versus a team of 30 years ago or 20 odd years ago? It would be a whitewash, wouldn't it? Simply because things have changed. And that's why we need to upskill, because if we keep playing by the old rules, and it's great that you've been here this weekend because you've seen a ton of new rules that you can play by, you've got to upskill. Because if you continue to bang your head against a wall, maybe the managed fund route where they're losing money and still charging a management fee, by the way, at some point you're going to be left in a position when it comes time to retire where the cupboard is bare. Now, I don't mean to alarm you, but let's just focus on this just for a moment. A lot of people right now are talking about this thing that's called the credit crisis, which apparently has been very difficult to make money, and I don't know if I buy that. Now, you think we're in a crisis right now. Give it about 7 or 8 years, and the baby boomers that are in the marketplace right now are going to start retiring. Now, they haven't earned big enough returns on their investments to be able to retire comfortably, which means they're going to have to start drawing their capital out of the market. You reckon we've got a credit crisis right now? You have seen nothing compared with what's coming. Now, I don't say that to scare you. Maybe it has, maybe it hasn't, I don't know. But what I tell you is this. Many of you have looked at the market in the past and you thought, look, maybe I'd like to get started with that, but I just don't know where to start. There's all this jargon. I don't know who to turn to help me. I don't know what the risks are. I don't know how much money I need. I don't have any idea whatsoever. And that in the past would have been a reason for you all not to be involved with the market. Unfortunately, by the end of my presentation, I would have taken that excuse away from you, because I'll show you that path that you simply can follow. And here's the really scary thing. Some of you will think about it, and you'll go away and think about it, and that's fine. But it's not about thinking about it, it's doing. Because one of the best pieces of advice my father's ever given me is this. He always used to say, Andrew, dig the well before you need the water. Now, in a few years' time, you'll be going there going, well, okay, we've been ticking over, we've done a few things, it's going along.